It's a green-looking screen as far as the Asian markets are concerned.
There's good progress on inflation with growth.
Double delight for the Indian economy. The inflation number has come in a tad lower than expected.
And supports there come in at 49,625.
Be data dependent. They're going to be empirically driven.
Regulator has come out with the final regulations when it comes to surrender value.
Nifty Bank is up 170. That's about 1/3%. 50,055 is where the Nifty Bank is at.
Giving them a tax break is not going to give a boost to any investments.
It's BC Asia Investment, BC Asia Growth, as well as BNP Paribas. All of these funds likely sold in today's block deal.
Oracle Corp, after its earnings, the very strong reaction in the stock there as well.
And what we're seeing is some consolidation, though the bias continues to be positive.
There are some visuals coming in of Rajnath Singh, in fact, taking charge as the defense minister.
We've come off the highs, but 88 points higher on the Nifty right now. Mid-caps are surging as well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it is once again a lot of green overall. 70 points of the Nifty is what you have. This is Thursday afternoon. Markets consolidating at high levels, but higher, I think, is the key word once again. I'm Prashant. With me, my colleague Surabhi, and Mangalam is with us as well. Guys, hi, good afternoon.
Good afternoon. Hi, good afternoon. I guess the markets have gotten into a bit of a pattern, right? Last couple of days, we start higher, then try to hold on to most of those gains.
Yeah.
And the mid-caps have been doing better, and that remains intact today as well. So sugar, a couple of defense names, lots of individual mid-caps and small caps holding out quite nicely.
Yeah, I think the market's made its mind. 23,400 on the Nifty is one of those lines where you just touch and go back again. And that's what they've done with 50,000 on the Nifty Bank as well. I was just looking at some data. In the last 8 sessions, the Nifty Bank has crossed 50,000 on an intraday basis 5 times. Closed above it just once, and that was what day? June 3rd, the exit poll day. That day, everything closed higher. But post that, every time an excursion upwards of 50,000 on the Nifty Bank wasn't, accepted by the end of trade.
Mangalam is suggesting we need another poll.
I'm not suggesting anything of that.
Okay.
The only poll we'll need is there should be a 4-day work week. 100% voting for that.
Okay, well, 60 odd points now. So 23,391, 392 is where we are at. So this is looking a decent day. When you look at 60, 70 points, when you look at the percentage change, 1/3%, 1/4%. So it's largely higher, but as I said, consolidating at these levels now. Bank Nifty is absolutely flat. Mangalam, of course, already outlined the levels, etc. It's a very sugary screen. It's actually, you could spot 20, 25 sugar names out there, and there are that many listed actually, which are all up between 10, 15, 20%. So lots and lots of action there. We'll touch upon that sector specifically with Manisha in a bit from now. And mid-caps and small caps aren't having it all that bad. I mean, the indices are outperforming the large cap indices. And the last I checked, you had about a 0.5% gain on these 2 indices. So that's the flavor. Market breadth is close. I mean, I think about 400-500 stocks separate what's up and what's down. The advanced decline ratio. So it's not one way or the other. It's not overwhelmingly positive, but it is somewhat positive. The gap has narrowed actually. If you just see over the last couple of days, it's starting to come off a little bit, but that's also because markets have done so well, and there is in certain pockets some profit booking which has also been emerging. Surabhi.
Yeah, absolutely. Sugar, definitely a very sweet space today. A lot of talk about the prospects of an MSP increase. We'll talk about that as we go forward. And life insurers are very, very interesting. It seems the markets, taking the finality of it rather well, that at least we have the regulations out. It's, it is a little lesser than the worst case scenario that was, at one point in time being penciled in. And there's a bit of a relief rally playing out on stocks. HDFC Life, ICICI Prudential Life, these are stocks on the upside. Most of them, even SBI Life is off the lows actually. SBI Life is still negative, but there's some traction on the stock that's building up. So that's how the life insurance stock has space has played out. Aside of that, on the Nifty, what's managed to work well are a couple of IT names. I've got an LTI Mindtree on the upside. Infosys is putting on some weight as well. Then you have a mix of economy and consumer stocks doing okay. L&T is up about 2%. contributing quite well. Titan sparkling bright today. Nestle, because it's final that there'll be no additional higher royalty going out to the parent. So with that finality coming in, again, the market seems to be cheering that. So on the Nifty, we're not that bad off. It's just that barring Nestle and barring Titan, some of the other FMCG stocks, by the way, there's a bit of a sell on that tactical trade post-election that seems to be playing out. Because if you look at Lever, Britannia, look at other names like, Marico, Godrej, most of the other FMCG names actually on the downside, Mangalam, today.
Well, so on the FMCG tactical shift, what was interesting is that immediately after the results came by, people started going long FMCG, hoping that there would be, there would be some sort of sops given for pushing consumer demand and all of that and stuff. At the same time, what we saw the other side, we saw a big decline in all the infra, defense and waterways sort of PSU theme. Then, as people figured out that there would be continuity, people started going long on the PSU, defense and rail theme once again, but they forgot that, they were long on FMCG as well. So maybe some part of that is unwinding. Be that as it may, from the monsoon standpoint, from what the management commentary was, and today we had Manoj Menon of ICICI Securities join in as well, said that there is a fair amount of under ownership and the valuations, while FMCG have never been cheap, they're not too different from what they were on a 5-year, 10-year average as well, which actually is a positive, largely because we had seen a big multiple up move in the last 3 years itself. So if you discount it for the last 5 or 10 years, then they are not particularly bad, and which is why maybe, a bit of long unwinding aside, the monsoon looks good for all these consumer staples. But having said all of that, the next 1 hour we'll also have the Nifty weekly options expiry, and out there the tug of war is pretty clear. 23,400 is where the action is on both the call as well as the put side. This is a time when a lot of the options are written, and that is something that is reflective in the kind of movement that we're seeing in India VIX as well. So 23,400 put still in the money, but has a premium of close to around 20 rupees. You pull up the 23,400 call, and that has a premium of around 12 rupees. So 30 points on either side of 23,400, which makes it around 23,370 to 23,430 is what the expiry range, the street is bracing for right now. Let's see where it goes, given the up move that we're seeing in a couple of these heavyweights like HDFC Bank. If that can play, one of those innings in the last hour of trade, then maybe the Nifty Bank goes above that 50,000 mark and the Nifty above that range.
Absolutely. So let's see how this plays out. By the way, Zomato is up 3%. I'm just curious, guys. Do you all order more if there are sporting events underway? I mean, the T20 World Cup, are you ordering more, Prashant? I don't know. Mangalam, are you ordering more?
Not me. Mangalam, I think, is a bit of a...
but
health.
I still order. I still order. In fact, the only thing is that, these games, they go until very late in the night. And that time, it's not very healthy to eat out or eat junk, etc.
Which is why the plain, simple narratives of, IPL is starting and this is starting, I don't know if that works. But anyway, for what it's worth, the stock is up about 3%.
India-Pakistan match, a lot of pizzas were sold. That is the word coming in from Samir Khetarpal.
Fair enough. All right, let's quickly get this show started. Then we've got Mitesh Thakkar joining in as always. So kick it off with some trading ideas. Mitesh, good afternoon. Still a very green screen. What would be your top trades?
Good afternoon. So I think the market is just, about managed to hold on to the levels of around 370, 350 zones. I think, we're just hovering around this 50-point band, and it's been a quiet day compared to the other days. So that's fine. I think maybe the movement will happen in the last 45 minutes. But since we don't have any signs of a breakdown, what I would suggest is that traders now bring their stop loss slightly tighter to about 23,310. And as long as that is not being broken, I think maintain a positive bias. Again, expiries are difficult to guess, but we'll go with the overall structure, which is on the positive side. On the stock specific basis, I have one buy and one sell. On the buying side is Ramco Cement with a stop at about 855 for targets of 900. And on the sell side is Steel Authority, which is sale. Keep a stop just above levels of 151, 75 and look for target of 144.
All right, Mitesh, we'll come back to you in about 20 minutes from now. But we also have sugar stocks. They've definitely been the flavor of the day. A big move, double-digit gains in a lot of these names that we're seeing, including the likes of Sri Renuka, etc. There are multiple expectations, one of a hike in MSP and perhaps some sort of positive news coming in on ethanol as well. Manisha joins in with all things sweet. Manisha.
Oh, yes. Well, there are absolutely three things that the industry anticipates that they will see as a positive for the sugar industry. I mean, they have been long waiting for this also, and this has been impending as well. So one, as you mentioned, is the hike in MSP. Remember, in last 4 years, we've seen constant increases in FRP, but no increase in minimum selling price of sugar. It has been holding steady at around 31 rupees per kg, and the market has put it out as 41 rupees per kg of an expectation. Well, there have been some source-based information coming in from the ministry officials suggesting that yes, there will be a hike, but it would be reasonable and perhaps not at 40-41, but whatever the industry gets perhaps would be on the positive, as they have been stagnant at 31 for last 4 years now. The second important point really is about ethanol. Now, the new ministry, as having taken charge, we've seen initial statements coming about in positive for ethanol. In December, after those restrictions on ethanol, with the kind of investments that the sugar as an industry has made, it was a bit of a setback and a pullback as well. But now, as the minister said, that 15% of ethanol blending for the month of May has been already achieved, and that the ministry sees that it is on target for 20% blending by the end of 2025. There was also a quote suggesting that out of 81,000 odd PSU outlets, nearly 13,000 already have E20 being delivered out. So the expectation is that if we are looking at a 20% blending, the requirement for ethanol would be to the tune of 1,016 crore litres, and that is what has been positive for the industry. And the third thing that is supporting the sugar industry is the fact that the markets also are anticipating an increase in the ethanol pricing. With FRP having been hiked for the next season, the ethanol price hike is what the street is awaiting for cane and also for B heavy, to the tune of around 62 to 65 rupees therein. So three things on cards, whatever comes in, and as soon as the other ones come in as well, is going to be quite positive.
Okay, all right, got it. So that's the expectation on which sugar stocks are definitely getting excited. Though, I mean, with food inflation being so sticky, will that MSP hike really come through or not? Well, we'll wait and watch. Thank you, Manisha, so much for putting that in perspective for us. In fact, earlier we did catch up with Atul Chaturvedi, Executive Chairman of Sri Renuka Sugars. Listen in to his take on the issue.
The industry has been asking for a revision of MSP, or minimum selling price, essentially to make this as a kind of an institutional, rather institutionalize the whole process, because FRP keeps getting increased and the minimum selling price doesn't move. So if this is increased, then it will send the right signal, and it will also give the signal to the farmers that their money is going to be assured in future, as the industry is not going to lose money. So I think this message, hopefully the government will probably revise this. Announcement by the Honorable Petroleum Minister has actually come as a whiff of fresh air. In fact, in December, when the cane juice ethanol and B-heavy ethanol was banned for making ethanol, so we were all very disappointed, and the headwinds were pretty high because sugar production was going up and it was adding on to our interest burden. But now this statement reaffirms that the government has not put the plan on the back burner, and the government is committed to ensure that the Prime Minister's target of achieving 20% blending by 2025 gets achieved. So what the industry is anticipating is that the price of cane juice ethanol should be more or less in tune with what the government is giving for maize-based ethanol, which is about closer to about 72 rupees, which means an increase of about 7 rupees from the current price. And similarly, the B-heavy ethanol price also needs to be jacked up in the same proportion, which would mean that it will now become something like 65, 66 rupees or thereabouts.
Okay, all right, that was Sri Renuka earlier. By the way, some commentary coming in. This is exclusive information we're picking up on the upcoming GST meeting. Fitment panel could be looking at bringing ATF under GST at 5%. This is, of course, a long-standing issue. It's been on ever since GST. I mean, the whole framework was institutionalized. ATF was out. And let's see what they do with the gas, because there was a lot of talk about bringing gas also under the ambit of the GST framework. The meeting, of course, is on the 22nd. So more on this. We'll try and get our colleagues to give us more inputs on this as we go forward.
The street is taking the ATF thing positively for a couple of these airline players. So we have Interglobe Aviation, which was mildly in the red, has now slipped, spiked up into the green. GST may consider a review of GST on online gaming, and if that were to happen, then we'd obviously see some sort of relief coming in for names like Delta Corp. There would be Nazara Tech. We'll keep an eye out on how that pans out, and more importantly for gas as well. So lot on the street were anticipating that there could be some sort of GST related announcement coming in on the gas sector, and as a result of which all these gas stocks were already in focus. We had a couple of brokerage notes as well. What we understand, and we'll try to get our correspondent in as well, whether gas is on the agenda or not, and if it is on the agenda, then definitely it would be seen as a sentiment positive. Then we'll obviously await what the outcome is.
You're absolutely right, Mangalam. ATF under GST, I think that's going to be actually a very big deal if it does happen, because for fuel, petrol, diesel, etc., state taxes are quite significant. I mean, that varies from state to state. And if that is actually made uniform across the board at a reasonable rate, I think, I think for the last 10, 15 years, this has been a demand. The fuel taxation needs to be sort of resolved, it needs to be kind of made uniform. And if that happens, I think, this is certainly very, very good news. We'll have.
There's also Delta Corp surging. Just want to point that out on the gaming piece of it.
That would be a positive, but also, we have clarification on the gas front as well. We do understand that there is going to be consideration of putting gas under the 12 or 18% GST slab as well. That flash should just come up for you. We'll try and touch base with our correspondent out here on this one. My sense is Tim C will be joining us shortly, either Tim C or Sapna. And the gas flash should come up for you. And that's the reason why I see Gujarat Gas has moved to the high point of trade. We are seeing some traction in other names as well. So, if that was to happen, then that would be a positive, because that's what brokerages said. In fact, just an hour ago, we had the Morbi Ceramic Association join us as well. And they said that they currently pay about 6% additional, as GST, for which they don't get any input tax credit. Were that to happen, then they would immediately get a 6% delta. They could either use that to lower their prices by 6% or see a margin improvement of 6%. Even if the truth is somewhere in the middle, that is a positive for all these ceramic players as well. So that would be, something like a Kajaria, Somani or Sera. All of them have been.
So three legs to this GST story that's breaking on your screens right now. One is on gas, bringing gas into the purview of GST. The second is on ATF, getting ATF into GST. And the third is gaming, online gaming. Now, I just want to point out, a bit of a caution on Delta. Delta is surging through the roof right now. But we need to remember, Delta is talking about not real money gaming with respect to online games. It's more a play on casinos. Now, will the government look at both equally? Because in the past, there's been a distinction, though there is a tendency to club both together. But by the way, Nazara, which is not reacting that well, Nazara in our last conversation told us categorically that they're looking to build on their real money gaming side in a big way, including by looking at acquisitions. They believe that even at 28%, the GST news was done. It was sort of absorbed by the market, and it was time to move on beyond it. But if there's a cut in GST on, which is 28% right now on real money gaming, that would be great for Nazara. So the market's taking its time to digest that news. It's reacting more to Delta.
So just a thing on Delta, that the biggest impact on Delta came in when the GST Council had earlier recommended casino, horse racing and online gaming will all be taxed at a uniform rate of 28%, and tax will be applicable on the face value of chips purchased in case of casinos. Is that going to be revised? Doesn't look like. There would be perhaps some sort of push towards online gaming. If that were to happen, then it would be a positive, but not as big a positive as the stock price move would suggest. And the second thing is that they already have GST claims worth nearly 23,000, which are under contention, for which the company has filed, review petitions.
To the Supreme Court, I think.
The matter is in the Supreme Court. Lawyers believe that there is no need for them to actually provide for that 23,000 crores because they're confident of winning. So if that were to happen, that is something which is already known by the street. So it's just an incremental positive if there are some rules that come in for online gaming. The bigger positive would be them actually going ahead and looking at an IPO for their, online poker business, which is Adda 52. So that would be a positive, but not something that would change the rules of casino or offline gaming dramatically. So that's not happening.
Yeah, I mean, unless we get to hear from our colleagues that this could be a change applicable also to casinos. So online gaming, casinos will be at par, and we're talking about both together. So we need to sort of see how that plays out. We've got Deven Choksi joining us on the show. Deven, lots of news breaking, actually. We started with sugar, but now we've gone to all these other segments because of the news on the screen. Let's actually, because these stocks are reacting so sharply, let's start first with Delta and Nazara. And what do you make of them, and whether you have any interest here? Because obviously they're very sensitive to which way regulation goes.
Yes, good afternoon. Well, I think fundamentally, whenever I think the input tax credit is available to whichever the consuming sector, it has to benefit the industry in general. I think that is how I will look at it. Having seen, I think the entire subject for you were discussing about the gas prices, and you were discussing about the subject consumption of the natural gas for the gas for the production of, I think, all the ceramic materials and all. I believe that I think this is where probably I think the user industry would get benefited most. And on one side, we remain distinctly positive about I think the building material segment as a whole. On the other side, I think the input tax credit available to ceramic industry in particular, I think could mean significant amount of gain. Consider the fact that I think more than 20,000 crore worth of exports, and I think if you are ended up getting the benefits from the local sales as well, put together, I think this could be, I think, the real big money that the industry could save as far as I think the ceramic business is concerned.
Okay, all right. Deven, we have to take a quick commercial break here, so allow us to do that. By the way, another 1 lakh crore market cap company in the mix now. Shriram Finance market cap has hit 1 lakh crores. It used to be the cheapest a large NBFC. I think it's the second largest NBFC still. But it's done phenomenally well, the share price, and another 1 lakh crore company. I think we've got 4 or 5 now, along with the others.
Not only the latest entrant to the 1 lakh crore club mark, but also the latest Nifty edition. Now Nifty company
edition as well, yeah, absolutely. We'll take a break here. We are back. We'll also have Jonathan Garner, who's waiting by. He's, of course, joining us from the sidelines at the Morgan Stanley India conference. Stay tuned. Okay, welcome back. Jonathan Garner is now joining us. He's Chief of Asia and Emerging Markets Equity Strategist at Morgan Stanley. He's joining us from the sidelines of the Morgan Stanley conference, which is being held here in Mumbai. Jonathan, great to have you back on the program, back on the channel. Thank you for your time. Prashant, this side. We were just sort of, before we came to you, we were looking at those sort of news lines which were coming through, that the GST Council is already starting to look at rationalizing tax rates on various things. I mean, I'm assuming the big talking point, of course, at the conference is the new government and the shape and form of things that we will see in terms of policy. Yes. If you can sort of reflect on some of the conversations you've had, and what are people sort of coming to you in terms of questions and even answers with regards to India and the market trajectory?
Well, I think the key thing to emphasise is continuity. So we have continuity in the finance ministry and in other ministries. Obviously, some changes, but I haven't looked at the details of what you're just referring to. But the aggregate fiscal stance has been a key underpinning of India's performance. relatively contained fiscal deficits, reorienting spending towards capital expenditure and away from subsidy expenditure, containing the size of the civil service and these sorts of measures. And that's something that investors are looking to see continued under the new government.
Right, Jonathan, good to see you in. Just wanted to know, one of the things, thesis that Morgan Stanley has is that going forward, the earnings will actually grow 500 basis points above consensus. The street is factoring around 15 to 16%. You guys believe that for the next 4 years, India's earnings could grow by almost 20%. And that would be the highest ever rate of growth for India's earnings in any period of history that you look at. What do you think will bring this alpha as against what consensus is expecting?
Well, it's really to do with the building blocks. So at the macroeconomic level, we've got a GDP growth environment that has been surprising on the upside, as you know, so 7 to 8% real GDP growth. Probably the aggregate sort of inflation rate, let's say around 5%. So that gets you straight away to sort of a 12, 13% nominal GDP growth environment. And then when you have corporates that are sort of have business models that are geared to the parts of the economy that are probably growing more rapidly overall than that, so consumer discretionary, industrials, financials, a sector like real estate, for example, that's starting to become much larger, it's quite realistic to think that you can get a 20% EPS CAGR. And in fact, India is already delivering. If you actually look at the last 3-4 years, we've actually had dollar earnings per share growth in India that's about 60 percentage points faster than overall emerging markets. So it's a complete breakout in earnings performance by India already.
Jonathan, hi, good afternoon. Great to have you on the show. So, question on foreign participation in Indian markets and what you hear around you. Foreign investors have been quite conspicuous by their absence, really. They've been buying Indian bonds, but not so much Indian stocks. One explanation that we got was that the US market itself is doing so well, so it's more about buying home equities. The other talk about is always about China, whether there's some more money flowing there. But what in your sense is leading to this underperformance purely in terms of flows? And do you see that changing in the second half for India?
In a word, yes, but I think it's worth spending some time to sort of disaggregate the flows a little bit, because I think there's often some sort of confusion about what's going on, and this year has been quite an interesting one in that regard. So traditionally, when you talk about flows vis-a-vis India, you're often really been talking about FII flows as that subcomponent that is from active emerging market fund managers. Now, that universe, the dedicated EM fund universe, is not really growing. There's significant changes happening within it. So India's actual relative share in that index is going up whilst China's declining. But what you are seeing now happening is a shift of global investor portfolios towards Japan, towards semiconductors, in particular AI-related names. And so that has, in a sense, absorbed a lot of the new money flows this year. And of course, we've had the election. So there's been uncertainty about the direction of India. Now we have the election and we know what the result is. And so I think actually not only are we likely to see some stabilization from the more traditional EM side of things, but what's really important is that as India's outperformed for 3-4 years now, its share of global equities is up to almost 2 percentage points, 200 basis points in the benchmark. When it was just 50 basis points 5 or 10 years ago, it was within the tracking error of most truly global fund managers. So they could afford effectively not to own an Indian stock. But that's not the case anymore. And if we're right about this earnings growth, the first question you asked me, and the future development of the market, it's going to be a $6-7 trillion market quite soon. Truly global funds, which are far larger than traditional EM funds, will have to buy the first 1, 2 or 3 India stocks. And it's at that point, I think, that you're really going to start to see the FII flows picking up. And if you are that kind of global fund and you're thinking, gosh, I really need to come to India, I need to buy my first stock, then again, the election it doesn't happen every day, obviously every 5 years. That then is also a reason to now come to conferences like ours and to think about buying India.
Jonathan, are they really, very large global funds who don't have any exposure in India at all, who will be buying, as you said, their first stock in India?
Yes. Yes, there is. Yes, absolutely. We've done some analysis on it. I think, again, I'll be limited in what I can say about stocks, but if you look at a stock like ICICI Bank, or other mega cap stocks that operate, let's say, as sort of diversified conglomerates across India. Those are candidate stocks. When China was in its heyday, which it's definitely not right now, you did have leading China internet and e-commerce names, particularly those names that actually IPO'd in the US, that found their way into a wide range of global equity portfolios. But that story is now over, effectively, and India's standing ready to move into that sort of position. So I think it's a really important change that's happening in global investor portfolios in the non-Japan part of Asia. Japan has always been essentially a more central part of global equity portfolios. But India has not actually reached out really beyond dedicated EM funds until this point.
Yeah, no, got that. How are some of the foreigners looking at the huge amount of participation from retail and what that is basically meant for valuations? Because, you know,
Yes.
dips are very short-lived now. You see the
Yes.
election volatility, right? I mean, nothing. So it doesn't give you an opportunity. It just snaps right back. And we've consistently moved higher without very much help from
Yes.
foreigners. So, yeah, go on.
Yes, and I'm very aware that small and mid-cap stocks have outperformed large-cap stocks, and things like private sector banks have not done as well as some, public sector entities here. But by the way, we don't just recommend ICICI Bank. We have names like Gale, we have Godrej in real estate, Maruti Suzuki. These are names that essentially we are allowed to talk about because we're actively recommending them at the moment. But we don't actually have a lot of small and mid caps, and the global investors will obviously have issues around liquidity and indeed on valuations. It's essentially something we see many times when a country is as successful as India is now, and when the demographic is relatively young, that people embrace their stock market, often in a very big way. They're making their first investment, they may be buying their first property, they're taking on their first mortgage, and sometimes that can run out of hand and has done historically in certain geographies. Now, it's not my job in essence to sort of call time on that, but it's certainly something that my colleague Ritam Desai is very focused on.
But just to complete that point, Jonathan, but is that the risk for India then? If you're trading at 19 times forward earnings only on local money, and you're saying second half expect the foreigners to come in as well, then is there enough stock to go around, or could this be a melt-up sort of a situation, which may be the biggest risk in itself?
The kind of stocks that we think. Yeah, the kind of stocks we think foreign investors will be interested in have actually been the stocks that have lagged the markets. And if you look at what Ritam or I have been writing about, we've been writing about mega cap India as inherently, let's say, cheaper valuations. That's the heart of our earnings growth story. But when you say at risk, this really only matters if there's an awful lot of leverage that is underpinning these investments. And we don't actually think that that's the case. If you say, look at China, which we haven't talked that much in this interview yet, but essentially they built up an enormous property bubble with very large amounts of debt in their economy underpinning that property bubble. In fact, total leverage in China is more than twice that of India if you look at debt to GDP, and then household leverage is 3 times that of China. There doesn't seem to us, albeit you can get volatility in small and mid-cap stocks in India, that there's anything like that story of enormous build-up of debt and capital misallocation that happened in China.
So if the foreign funds do come by in the second half of this year, as everyone's anticipating, then you would presume that a lot of it would go to private sector financials, which haven't done well, in this up move that we've seen so far?
Yes, and obviously some of those names that I mentioned and some of the mega cap diversified conglomerates that exist within the Indian market. I think what people will be probably less interested in buying are the offshore earner stocks, including some of the IT outsourcing names, because there, again, the AI thematic, we get asked a lot about what that means for those business models longer term. Near term, they're guiding quite strongly on earnings, but longer term, these AI tools in terms of coding and a lot of what these companies provide, it might actually be quite disruptive for them. So for us, the India story is very much about domestic India, domestic demand.
Jonathan, will you guys be sort of initiating more and more names every year? I mean, because there's hunger for ideas, right? I mean, I think we hear from domestic investors all the time.
Yes, I mean, we're very strongly of the view that India and Japan have these 2 secular bull markets, so we've been rolling out additional coverage in those. And Asian investing is far more diverse in terms of the opportunity set than it was 3 or 4 years ago when the conversation was overwhelmingly China-centric.
Just a quick final point from my end, Jonathan. Here's this market where a lot of the industrial stocks, capital goods manufacturers, and many of them are MNCs, they're trading at 80 times, 90 times forward earnings, whereas you have consumer stocks, which have traditionally been more expensive. They've come down to about 50 times aggregate. So just,
Yes.
overall, in terms of portfolio stance, would you still continue to favor economy-facing stocks in India?
Well, I don't know if you count Maruti Suzuki as a consumer stock, but it's certainly, you're right, it's interesting. The relative performance trends have been quite significant, and it has thrown up some of these sort of valuation disparities. And I do think that the consumer is going to be an important part of the economic story here. It often goes this way, that when you have, let's say, a regime that is fiscally stable, where you've got this infrastructure delivery I mentioned at the start of the interview, the consumer can then use a lot of this infrastructure. And again, the inward FDI that we're getting in the manufacturing sector, which is unprecedented at this point, that creates jobs that pay higher wages, again, that speaks to the consumer. So, yes, I think it's right to be tilted towards that.
Right, Jonathan, thank you so much for joining in with your insights on what looks good in India, what the risks could be. Obviously, I was, glancing through some of those risks, which included the likes of long-term effects of artificial intelligence, geopolitical tensions, and perhaps something like climate change as well. But those are conversations for another occasion and a much longer chat that we'll have on all these risks. But for now, wish you good luck at the conference, and we hope that, foreign money does come in, as you mentioned, in the second half of this year. But more importantly, earnings should grow 20% plus as well. Take a short break, come back. As always, we'll get you what the dealing rooms are talking about on this weekly options expiry day.
Welcome back. So just putting the spotlight back on the market, mid-cap index, of course, has been the better performing index compared to the Nifty today. And some of these stocks that started reacting to the source-based inputs that we were picking up on the upcoming GST meeting, they're still retaining some of that gain. There's a little bit of green on Interglobe, though, of course, it's flattened out. There's Delta, which is still up about 7%. Nazara hasn't reacted too much. It's still about a 1% cut on Nazara. That's the volatility that played out on Interglobe. And those
Gail's actually done well. Gail's up.
Gail, yeah, the gas stocks.
It's up to 220 odd rupees. It's a recovery of almost 3% from the lows. And we have a note from the brokerages coming in saying that were this to happen, it would impact their EBITDA positively by about 2%.
Well, that was really sort of quick reactions coming in on that expected development on including gas in the GST chain. In fact, speaking of the story, let's go to the source, and that is Timsi Jaipuria. Timsi, tell us the inputs that you've picked up that really were moving some of the stocks in the market. So tell us what all is expected ahead of this meeting. Timsi, if you can hear me.
Well, as you rightly said, the GST Council is now scheduled to meet on 22nd of June. And ahead of the Council, there will be the meeting crucial. Yes, I can hear you. Can you hear me?
Yes, we can.
Can you hear me? Well, ahead of the Council meeting will be the crucial meeting of Fitment Committee, which is likely to meet before. Well, yes, what we are picking up from sources is that ahead of the council meet, which is scheduled on June 22nd, will be the crucial meeting of Fitment Committee. Fitment Committee is likely to study Oil Ministry's proposal to bring ATF under GST at 5% and to bring natural gas either at 12% or 18%. Apart from this, Fitment Committee could also come up with clarity on claiming ITC on several sectors where industry has been facing issues. It could also lay down a proposal and a proper detailed clarity on applicability of GST on metal and steel scrap. The committee could also consider proposal to correct inverted duty structure on as many as 14 items, including textile, leather, pharma, a proposal which has been sent by DPIIT. On the other hand, when it comes to the council, which is scheduled to meet on June 22nd, it is likely to clarify norms on ITC on telecom services spectrum. Further, it will discuss measures for bringing in ease of doing business, especially for global companies with branch office in India and head office abroad. Council could also issue clarification for foreign airlines and shipping lines that have come under DGGI scanner. Council is also likely to approve timeline for pan-India rollout of mandatory Aadhaar-based biometric authentication of GST taxpayers. It could also come up with a roadmap for further simplification of rules, enhanced compliance for taxpayers, and the most crucial, Council could consider further correction of inverted duty structure and the need of overall rate rationalization, a task which has been pending with the GOM that is being headed by UP's Finance Minister Suresh Khanna. So that timeline will be revised and it will be given a strict timeline to the GOM to come up with a proper proposal that can be considered by the council. And yes, industry is likely to push for a review of GST on online gaming, but sources say that the council is likely to have reservations and it will continue with the ongoing policy of applying 28% on actionable claims. So that's the gist on the GST Council meeting.
Take that point, Timsi. Thanks a lot for putting that into perspective. Just a functional update. She said they may consider ITC, that's input tax credit, because every time they hear the terms GST and ITC, everyone's radars go up for ITC, the stock. So this is not the stock that we're talking about, it's input tax credit. But be that as it may, no, it's not the stock. Again, it is input tax credit that we're talking about. But let's go across to Nimesh, who's been dialing in the lines on the dealing rooms. Nimesh, what's happening?
Hi, Mangalam. So again, what's happening is very clear that the mid caps and the broader market stocks continue to outperform, and that's been the trend today as well. And the good part is this outperformance is backed by FI buying as well, largely institutional buying. What I mean, so again in today's trade, the sense is that the flows are positive. In fact, there's going to be a small market at close basket buying as well in some select mid cap names. That's the overall feedback as far as flows are concerned. Within sectors, I guess the churn continues. So now there's a bit of sense of buying into the NBFC names as well. We saw a bit of trend into housing finance companies. Now it looks like there's a bit of buying interest back in the NBFC space. So select NBFCs is what are well bid by the larger institutions in today's trade. But again, I've been saying for the last couple of days, and it turns out to be every single day you're going to see a large block. So the trend of large block deals, either PE sellers or promoters selling out, is likely to continue. And even for the next few days, there is a very strong pipeline, is what I understand. And there are a lot of names which have been talked about where some large blocks are expected. So that trend is going to continue. But I guess the mid-cap outperformance for the last couple of days is backed by institutional buying as well.
Okay. Nimish, in terms of chatter, are there more blocks? What's on your list?
Well, there are a couple of names which are part of the block, but outside of blocks as well, some interesting developments happening in the broader market stocks. So the first name is Kaya. For second day running, that stock is locked at 20% upper circuit. Even in today's trade, today's market, there were some multiple blocks. Close to 8% equity got in hands. I understand one of the leading family offices was a buyer in today's blog as well. So looks like some traction is back in Kaya for that matter. So that's the first name. The second stock is L&T Finance. We all spoke about a large block got executed in L&T Finance today. It was a clean out trade. Domestic mutual fund seems to be 70% of the book is what I understand. But beyond that, now the feedback is there's going to be a big corporate development in L&T Finance very soon. The indication is that maybe they will announce an acquisition very soon. So that's something which need to be tracked in L&T Finance going forward. So that's the second name. The third stock is Paytm. Big move on that stock and on large volumes as well. So for I understand some very large influential HNI investors have been active buyers in Paytm for the last couple of days. And even in Paytm, the feedback is you would hear some deal very soon in Paytm as well. So that's something to track there as well. And the last name is Piramal Enterprises. I spoke about NBFCs in general being well bid. Paytm stands out. Piramal Enterprise stands out largely on the back of buying interest back. So even that stock is buzzing and on good volumes on back of FI buying.
Interesting one on Paytm. In fact, just yesterday at this time itself, we saw near 8% up move on Paytm. The stock ended, about 7-8% higher, and thereafter now as we speak another 5% up move. And also on Kaya, what's interesting is that from a business standpoint it wasn't doing too well. It was just about a couple of months ago where the management decided to offload their GCC business, which was the Middle East business, and now they're focusing on domestics itself. So let's see whether there is improvement in the business that comes by or not, given the underlying macro trend of wellness, preventive healthcare, etc. If that were to happen, then this would be one of those front runners out there. But let's see what happens, to be very honest.
Absolutely. And so 390 is doing very, very well at this point. Mitesh is with us with trades for you right now. Mitesh, what do you have? Afternoon.
Prashant, I think it's still not giving a directional bias. Still the market is flat, but a lot of stocks are showing good traction, and even finance some good BTSTs in the day side. 26.69 should be the stop. 27.10.20 could be the target for tomorrow. Shriram Finance, and the other stock which is going to pull back and is on support level is Tata Consumer. I think the stop below 11.07 and 11.30 could be the target for tomorrow.
Look at that move on Shriram Finance. I mean, from the time that we started, I think it's added about 1.5%, 2%. And the other one is, of course, Tata Consumer, which Mitesh is a trade on. Thanks very much, Mitesh, for those trades. Well, insurance, life insurance stocks are all buzzing. And the final surrender value norms finally came. And that is the plate, which I think is the operative one. It basically tells you that as compared to May, where the percentage surrender is proportion of the premium received was 82%, is not that much change. It's 78%. So was this in the price in that sense with the selling that we saw in May? And this sort of clearing event reaction in that sense? Yash is here with some details. Yash.
Well, Prashant, it's been about 6 months that we've been talking and reporting on, the various changes from the insurance industry as well as the regulator on how things are moving on surrender value. Quite honestly, investors of these insurance stocks by now were also bored in terms of how these things were affecting the businesses at life insurance companies. Today, there is an end to all of that with the final regulations on surrender value coming out. And essentially, since there is an end to it, it is the start of something new when it comes to businesses for these life insurance companies. No taking away from the fact that it's a big negative for life insurance companies. Their expenses will increase, in turn impacting their VNB margins, especially for two companies, HDFC Life and Max Financial Services, since their exposure to non-participating book is higher. But, the street now wants to move on. The reason why these stocks are up despite the negative on the surrender value, the first one is now all negatives are in the price. The number that you spoke about, 78%, is now known. What is the absolute value in terms of impact? HDFC Life coming out and saying that we'll be impacted by about 100 basis points on the margin front. The industry, individual players getting impacted by about 80 to 200 basis points. Now is well known for investors. The impact on the financials is well known for the investors, and now the street wants to look forward in terms of the opportunities which lie in front of these life insurance players. This may come in the form of composite license, in terms of the new avenues of business that may arise. So that is something that the street is looking at. The next thing is that all brokerages today have unanimously spoken about how life insurance companies seem to be well equipped to handle the damages which will come from higher surrender value. This may be in the form of deferred commissions, trailing commissions, clawback factor, new products which will have higher commissions and higher premiums. All of that the street is taking note of and expecting some sort of strategization on the side of life insurance companies when it comes to mitigating the impact of the higher surrender value. So of course the reason why the stocks are up today, valuation comfort, event being out of the way, and now looking forward to the new business avenues and strategies to mitigate the impact.
All right, yes, thanks very much for that. Insurance stocks doing well. We take a break. We are back, but we leave you with Citi's Global Chief Economist, Nathan Sheets. We spoke with him earlier about rate cuts in the US. Listen in.
Previously, the soft CPI number was very important. And if we get a couple more months of inflation, like we saw this morning, the Fed's going to be cutting rates. And my sense is that very well may happen as soon as September. I think the broad view is that some of the hotter inflation we had earlier in the year is breaking. And given that, I think that the expectation, as I mentioned, is that the Fed is going to be data-driven, and that's going to open the door for more rate cuts. We are seeing some improvement in inflation that was not fully factored into those projections. Broadly speaking, global investors are aware of and comfortable with the investment regime and know how to invest in India. We've certainly seen that over the last several years. And then, as you point out, I think the question is, on the margins, are policies going to be changing in some way because it's a coalition government that might have an effect on either the ability to invest or the attractiveness of investment in India? And I think those are the open questions. But for now, based on where the equity market is, I think investors are giving Modi the benefit of the doubt.
Welcome back. 50 points down on the Nifty Bank. The Nifty, just like a magnet, stuck to 23,400, just the way, the option writers were positioning for the weekly options expiry. Post 3 p.m., there hasn't really been a move, and that's exactly what, was factored in. And that's reflective in the kind of decline that we've seen in the India VIX as well. All those straddles which were written, which is a call and a put together on that 23,400 mark. Good time to get in some ideas then. Amrish Baliga joins in. Amrish, so much has happened in the market. The small and mid-cap index have been on a tear ever since, we saw some recovery post the election-related jolts. What ideas are you backing right now?
See, right now the idea which I have is more on the consumer side. It's Bata India, largest retailer and leading manufacturer of footwear in India across segments, which is men's, women's, and kids. 2 years back, they entered into the sneaker segment in a big way. They were there in that segment earlier, but there was a huge focus on that, targeting at millennials. And this is a decently large segment. And they have a large distribution network in about 1,500 plus towns. with 1,862.
We'll just come back. We'll just
Yeah.
try and fix that and come back. Okay, I think you can. Amrish, sorry, we couldn't hear you at all. I think you were on mute. Sorry about that. Yeah, now
Yes,
it's come on. Go
now
on.
we can.
Okay, I mean, the stock is Bata India, which is the largest retailer and leading manufacturer of footwear in India. About 2 years back, they got into the sneaker segment in a big way. In fact, with a huge focus, which is targeting at millennials. And this is a decently large segment. If you look at the distribution network, they have about 1,862 stores in more than 1,500 cities and towns. And now they're expanding through the franchisee route. And they have a first mover advantage in tier 3 to tier 5 towns. And they've recently tied up with a premium brand like Nine West. Currently about 40 stores, expanding to about 70 stores. If you look at the Q4 numbers, they were flat, but we are seeing a margin uptick. And if you look at the balance sheet, it's quite healthy with a decent cash and a negative working capital cycle, so which is a positive. And the input costs have been coming down, so margins should improve going ahead. And in the recent investor call, even the management has been quite upbeat. So I'm looking at FY25 earnings to bounce back decently well. And FY26, I'm expecting an EPS of about 38. So I have a price target of 1,900 for the stock.
1,900 on Bata. We had the management post their earnings as well, saying that they aren't ruling out double-digit growth in FY25 itself, with obviously the premium doing well, and if mass starts to pick up, that'll be good as well. The realizations on their sneaker business are a lot higher, and what's interesting is that they're also seeding newer brands as individual stores. So Bata has the sports brand called Power. They have standalone Power stores, which has gone into athleisure and all of that and stuff as well. But these repositioning exercises typically take a lot more time than what one anticipated. Let's see how that goes.
I mean, I went to their store. I think the largest Bata store is near where I stay, in here nearby. And, the range has gone up. It's all premium, and prices are also quite premium across the board. And I was chatting with the folk there, and they were saying that actually across the board, I mean, it's a big step up over the last 2-3 years in terms of pricing for the same product. Actually, the shoe that I buy, I think I bought the same shoe for the last 6 years.
Right.
I wear it out and then I go pick up another one. The prices are substantially higher, and
this is an exercise that I did, and this is Bata's tagline as well.
Yeah.
The tagline is surprisingly Bata. So I bought a couple of pairs, and I would walk around. People would say, "Hey, that's a nice pair. What is it?" I say, "Would you be able to guess it?" They said, "No, tell me." I would say Bata, and they would be surprised. And literally, that is translated in their ad as well. The tagline saying surprisingly Bata. So let's see how that goes.
Okay, well, just about 4.5 minutes left. We've still got Amrish with us. Amrish, today's story obviously has been this rally that we've seen in life insurance stocks, because some relief that maybe this is the final set of guidelines. What do you make of it, and would you buy any life insurance company at the moment?
I mean, see, this sword has been dangling, I think, for the last, 9 months to 12 months, and because of which you had a number of these stocks, especially HDFC Life, which was under pressure. So at least there's been a decision on this. And yes, I mean, it is going to affect the margins, and they have also accepted that there'll be 100 basis points dip in the margins. But what I also see going ahead is the commission for the agents, I think, will either come down to a certain extent or get deferred, because the average commission paid out in the first year is about 35%. And if you look at the policies which are surrendered, quite a few policies are surrendered in the first 1 or 2 years. And that is going to affect the margins in a big way. So I think either commissions will get deferred or they would reduce. I think that's what I see going ahead, because you really can't control the marketing cost beyond a certain extent. So overall, after this, I would be positive on HDFC Life, basically because it has underperformed, and this is now behind them. So I think from here, we should see at least a decent uptick.
Okay, we should see a decent uptick coming through in life insurance names as well. Anything else on your radar? These housing finance companies? Home First has been surging, and I was asking Abhishek what's going on there. Aptors, Home Finance, Aavas, these are all stocks which have not done well over a period of time. But of course, most of these also have had private equity investors who come to sell once in a while, every 6 months or so. Anything you like here? Not just these, but other HFCs as well.
I would look at possibly LIC housing. Again, if you're looking at the housing sector as such, we are talking of the growth continuing for the next at least foreseeable 4 to 5 years. I mean, looking at the sort of wealth which has been created, I mean, across the board, I mean, whether you talk of the CXOs or even below, because the way the markets have been booming, the excess funds which are created out here naturally goes to, I mean, buying a house or upgrading yourself with a better house or a better car. So clearly, I think these are the segments which are going to do extremely well. And if they do well, clearly the finance companies associated with them should do well.
Okay. All right. I think we are down to the last 2 minutes. So, Amrish, perhaps we'll take your leave. Thank you very much for joining in on the show today. As we're winding out, it's again, the day is similar to what we've seen in the past in this week, where you hit higher levels in the morning and then you kind of peter off from there. In fact, today the Nifty was almost taking aim at 23,500. We've ended a good 80-90 points off that, barely. Sticking to the 23,400 mark. But anyway, for what it's worth, let's quickly talk about what has worked today. So on the large cap screen, Shriram Finance, I mean, hitting records. Fantastic 5% surge on that stock as we're closing out. Then the life insurers that we were just talking about, HDFC Life has had a nice run, 3.5% on the higher side over there. Divi's, M&M and Titan are the next three on the lineup. So very diverse set of stocks, actually on the higher side on the screen. Some technology names like TCS, Wipro and LTI Mindtree also doing well. And finally, L&T, in terms of one of the heavyweights that really performed well, all of these adding to the gains for the Nifty. So I think barring Bank Nifty, which was a little quiet, some of the other constituents did much better today.
It was the Nifty Bank actually which, put a lid on the gains that the Nifty was seeing, and as a result of which the Nifty expired at 23,400 for the weekly options that were written at that level. There were no problems with the mid-cap index. In fact, the rally for that index continues for the 7th day in a row now, a fresh record close for the mid-cap index. Strong advanced declines as well, where we had nearly 1,500 stocks gaining for just about 900, which declined. And on the way up, the stock of the day definitely had to be Oracle Financial Services. The big surge that we saw in Oracle overnight, its global parent, not sure if there is a business relation between the two, or there could be a benefit that would directly come to Oracle Financial Services, but the rub-off itself set off that stock higher by almost 11%. We saw Chola Investments do well, Gujarat Gas, GAIL, all of them picked up towards the latter half of trade as the news on GST came by. But the weakness was, of course, the FMCG pack. We had NCC, Dabur and Marico along with United Spirits not doing particularly well. Sun TV too, likely to enter F&O ban. The stock lower by about 2.5%.
Well, a lot went on, right? I mean, and by the way, market breadth improved a little bit towards the end, almost 1,700 higher and under 1,000 stocks lower. So that's also something which is noteworthy. So, I mean, that's, I think, the close, not bad at all. The Nifty ending about 77 points higher, could have been up, could have been more. So the market, of course, ending off the highs of the day. But this is a good-looking screen, 23,400 on the index. Well, it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks for staying with us. But programming will continue and Markets Forward is coming right up. It'll prepare you for what's next, that is tomorrow. Stay with us.